Hi, my name is Martin Cole and I've been trading financial markets for close on 20 years. In fact, when I started out, the internet did not even exist. Amazing how time flies. Chances are, if you're on this site, you're interested in learning how to trade the markets. Well, I can help you with that, but first let me tell you my story and how I got to where I am today. This document that I'm holding here is actually had a great impact on my life. This is my official bankrupt certificate. I was bankrupt number 45 of the year 1990. And that was it. I thought my life was over on that day. I was homeless, I was penniless, and I had a wife and 2 young children to take care of. Well, it was tough fighting back, but we did it. And eventually, I ended up discovering trading in the financial markets. Now, like I said, this was way before the internet. So things were very different then. In fact, so different that you actually had to learn how to give proper verbal orders over the telephone to your broker. Now, today of course it's great. You can just click a button and your trade is completed. Well, it was not all plain sailing for me. In fact, I very nearly went broke again as a result of my non-existent trading skills. I started to realise that something was fundamentally wrong, and if I did not discover what it was, and soon, I would be out of the trading business forever. Then I did discover something, and that something would change my life forever. That something was actually three things, or rather 3 phases of the market that are normally completely hidden from traders' eyes. Now, today, right now, I'd like to explain to you what it was that I discovered, and you judge for yourself as to the impact that this could have on your trading. However, just before I do that, let me tell you what happened to me as a result of this discovery. A little over 5 years after my bankruptcy, I had left the United Kingdom, I'd bought a house for cash in Spain, and there I was living on the coast of sunshine, enjoying all the benefits of financial freedom. If I had known what I later learned about the 3 phases, I could have achieved the same within 1 year. That is how powerful the 3 phases are. I'd like to teach you how to look at the market from a different perspective. A perspective that will reveal to you the 3 phases, and once you understand those 3 phases, you'll be making money by default, because you'll be joining basically in on the phase where the market makers extract millions of dollars on a daily basis for their own benefits, in full view of all onlookers. Okay, on the first slide here we can see that we've got 2 fundamental truths, which are manipulation and beliefs. Now, what I want to talk to you about first off there is the single element, which is the belief, and how beliefs actually operate. Now, most people will say that the market is driven by price, that is, that price moves and that drives the market. If we're going to understand the 3 phases, one of the first things we have to accept that it's not price driven, that is, the market is not price driven. It is in fact driven by belief. Now, I can get into this further on later videos, but for now, very briefly, I want you to consider this. If I was to ask you to invest in something with the expectation of that going to increase in value, you would highly likely do that if you develop the belief that the market was indeed going to rise up and that investment, let us say, was going to pay off. If, however, I was standing here convincing you to do this, but you believed the price was not going to go up and this was not going to be a good investment, then you would not take that investment, or highly likely to take that investment. So what we can draw from this at a very simple level is that it's not whether the price has actually moved up or whether the price moves down, or whether you're going to invest or whether you're not. It really comes down to what you believe. So if you believe that the price is likely to rise, then you are going to be free to invest in that and to actually make the decision to buy into the market. If you're not convinced of that, you are not going to buy into the market. Therefore, you would not make a difference in the price. So what I want you to draw from this, at the back of a price decision, the back of a price movement, let us say, is either a trader's decision to either buy, sell, or do nothing, as it were, in the marketplace. Okay, now the next thing I can see off here, I've got on here is manipulation. Now, a lot of people will say and agree that the market is manipulated. Now, other people will say that the market is not manipulated because it's too vast. Now, I want you to work from the basis that the market is manipulated, and later on I'll show that and prove to you how that works. But for now, just accept the fact that the market is manipulated. It's a manipulated process. And if you've been trading for any degree of time, you'll realise that just how you can feel manipulated at times when you enter the market starts to go immediately against you. Or just basically you can understand how you can see in the charts how the market is being manipulated. But what I want to get across to you is understood that it's not the price that's being manipulated, it's rather the beliefs of the traders that are being manipulated. It is much easier to manipulate beliefs than it is to manipulate the price. If the market makers, or the markets in general, can instill in you the belief that the market is likely to rise, you are not going to be interested in selling that market. You are certainly going to be believing that you should be buying the market. And of course, if the market is ultimately going down, that means that you're going to lose out and somebody else is going to profit, namely that being the market makers. Okay, so let's just move on now to the three phases, the market makers manipulation process, and the three phases that I'm talking about. Now what we see here is, first off, we have got the accumulation phase. Secondly, we have the manipulation phase. And third, we have the profit release phase. Now, what I want to do now is to talk briefly about the accumulation phase as a standalone phase, and we'll cover each phase as we go through. Okay, so the accumulation phase. The accumulation phase is the time when accumulation of either buy or sell orders is taking place. Without an accumulation period, there can be no profit release phase. Now, this is something very important to understand. We envisage the market makers, we have the market makers as a body, an entity outside, and they are circling around, if you like, the pot of money or the financial markets as a global entity, with the sole intent of extracting money from that market. Now, if we're cycling around there, we need to actually accumulate something to actually sell later on. Now, everybody can understand that if you want to buy something, say at the price of 100, I'm just using 100 as an example, and you want to profit from that, that market's going to rise up to say 120, you can then sell it and you profit from that piece in the middle. Now, the more obviously buys that you can accumulate at a level of 100, and the more you can sell at 120, say, you can make more profit. So the idea is we want to accumulate as much as we can at a low price to then sell into a rising price later on. And the rising price is going to be the profit release cycle, which we'll get to when we get to the end of this presentation. Now, the next thing I want to talk to you about is the manipulation phase. Okay, now the manipulation phase is a time where the market makers use several well-established practices to manipulate traders' beliefs about future price. When we've actually entered the market, or we're thinking about entering the market, or whilst the accumulation is going on, we'll very rarely, we're very highly unlikely we'll ever see a trending market. Accumulation will go on through a sideways period of the market, and I'll show you this later on charts. But while this is going through, of course, if we were to get the inclination that, or the idea that the market makers were actually accumulating buy orders, it would make great sense for us to do the same. Now, unfortunately, there's no real way that we can actually know at that period of time whether they're definitely accumulating buy orders or sell orders. Later on we can, and I will show you exactly how you can do that with great effect. But whilst it's going through that period, we can't really get a real concept or a real idea or knowledge of knowing whether they're accumulating buy orders or sell orders. Now, of course, if they're accumulating buy orders, we're anticipating a rising market. If they're accumulating sell orders, we're going to see a falling market. And that is going to happen by default, depending upon what the market makers are accumulating as a whole. So, going back to our process where the accumulation is running through, market makers are now accumulating our buy orders, let us say. It's easiest to explain the buy orders. What they don't want to do is to reveal that information out to us as traders, to the outside world, not just to us as traders, but to the outside world, because if they do, the market will start to move up, and of course they want to accumulate, like I said earlier, at the level of 100 to then later sell on it to rise. So what they do is then go through a manipulation process where we'll see they will purely manipulate price, and this time they will manipulate price to ultimately manipulate the traders' beliefs. But by moving a market up and down, by sending a market off in false directions first and then bringing a market back, we can be manipulated and have our minds messed with, if you like. Even though we may believe and actual fact have the direction worked out, we become manipulated out of that initial thought. That comes on to the profit release phase, which is the cycle, the last phase of there. And the profit release phase is where the market makers are able to distribute the orders they accumulated during the accumulation phase. Okay, now what I mean by this is that once we've accumulated, or once the market makers have accumulated, in this case we said the buy orders, and they've accumulated these, and as again, let us say at 100, they've accumulated them at that level, and they're now looking for the market to go up. Now, if they expose their hand, as it were, in other words, you show your hand, and now the market shows at the strength, what happens? The market starts to rise up, and we as outside traders, then we rush into the market and to start to buy the market in the expectation of making profits. Now, what's actually going on here is that while we're allowed to make those profits, of course, for a market maker or somebody who's bought at 100 here, this level, needs to sell into higher prices. What do we do as we start to buy? The market makers sell to us, thus releasing the profits. The higher and higher and higher the market goes, the more profits that are made from the block that has gone through the accumulation process at the bottom. Like I say, this is in the case of a rising market. Well, we've run out of time for this introduction. If you would like to have a look at my next video that follows on from this one, then just pop your first name and email into the form below. Just one more thing, a request really. When you fill out your name, please use a real first name. My name's Martin, and I really would much rather communicate with you on a real name basis than someone that is just putting in something to fill out a form. Have a truly great day, and I'll catch up with you very soon.